How's it going, everyone? Today, we're going to be covering the US stock market, and I'm going to be sharing some key levels that have become apparent and some important developments in the chart of the Dow Jones Industrial Average, as well as the S&P 500. I haven't done a big update video on the US stock market, looking at the technical picture since late March. Now, many of you know that follow me on my Instagram and my Twitter. You guys know that I make regular updates here and there when I see something reasonably important happening in the US stock market or in the cryptocurrency market, especially the cryptocurrency market, because things are subject to change very, very quickly. And my perspective on Bitcoin changed back in September since my last video that I think I did sometime in August. And so things change real quick. And so I do more of my short-term updates on those channels. But I have a big update today, especially given all the developments in the US stock market on the Dow Jones chart that I want to share today that I think will bring a lot of clarity as far as where we are in the intermediate and the longer term trend. Now, again, the longer term trend, looking at the last like 90 years, nothing much has changed. Nothing has changed since my video back in March. But when we look at the trend since March of 2020, I think a lot of things are starting to come together, and the structure is starting to form, and the alternate possibilities of it are starting to narrow down, which is where you get a lot of the opportunities and clean kinds of trades. If you're into that, they really become readily available as the possibilities start to narrow. So we're going to be talking about that today. I'm going to be sharing some of the levels and things that I'm looking at on the chart that I find very important. So let's go ahead and check out the Dow Jones chart. So this is the Dow Jones weekly chart. Here is the COVID crash back in 2020. And just to review, I actually haven't shown a big chart on my Instagram and Twitter in a while, since I'm covering more of the short-term picture. But my count for the 5-wave move that's developing since March goes something like this. So first off, there's a 5-wave move up over to here. So we have a wave 1 and a wave 2 and a wave 1, 2, 3. Actually, no, this is all one right here. So this is 1, 2, 3, 4, 5. 1, 2, 3, triangle wave 4 and 5. And so that's the first wave that I'm counting. And then we have a zigzag wave 2 right here. That's back down to October 2020. And then we have a long move up here in wave 3. This is my preferred count at this time. And something really important is that since May of 2021, we've just been having this kind of ugly sideways move in the Dow. Now, if you guys are following it, you guys know that the Dow Jones and the S&P made new all-time highs in the last couple days. And I think it just made a new closing high as of today. I'm recording this on Tuesday. And so that's a big development. But what's really important is what happened before the all-time high, because that's where I think this structure has started to really define itself because of the nature of this correction. And so what I'm calling this is wave 4, and I think we're going up in the final wave 5. So I'm just going to put this here for now. What's important about this is the form that it took. And so I'm going to go ahead and actually, I'm just going to show the chart that I posted a while back. This was, I think I initially posted this on, let's see, September 23rd. And this is the count that I was looking at. This is the May 3rd, May whatever high, which is right here. I'll show it right here. This is on the weekly chart. So this is zoomed in onto the daily chart. And what had happened was we had a 3-wave decline, and then we had a new all-time high, but this didn't take a 5-wave shape. It took an overlapping corrective looking form, which I would count as a WXY. You had a W wave up here, you had 5 waves up, 3 waves down, 5 waves up. So that's W, A, B, C, W, X, and then we had an A, B, C up. That's corrective. It's not an impulsive move, which means it's not going in the direction of the larger trend. The larger trend in this case was down. This was a sideways correction. And so what I was looking at was that this was taking the form of a 3-wave, 3-wave, 3-wave move. And I was anticipating another 3-wave move up and a 3-wave move down. That would be somewhat proportional to the previous waves of decline and moves up, the counter trend moves. And so when we look at what actually happened, it's pretty similar, yet wave D and wave E ended up tracing very small internal patterns. They occurred very quickly. Now these are still 3-wave moves. Here we can see that this one took the shape of A, B, and then a wave C, which is 5 waves. 1, 2, 3, 4, 5. And this one also took the shape of 3 waves, A, B, C. So internally, definitely, they definitely work. But this was a bunch of ugly price action. And, I wasn't sure if wave D was starting to trace out a larger move. But regardless, what happened was that we had a wave, 5-wave move sideways, which is a triangle. It could also be counted as a double 3, but again, I don't want to get too into the technicalities of the wave and the count, because regardless of how you count it, we know that the correction is done, because whether it took a form of a double 3 where you would end it right here, or if it took the shape of a running triangle, which is what I prefer, and which is what's labeled here, A, B, C, D, E. If both of these levels are taken out, 34,115 and 33,785.54, once this level is taken out, it doesn't matter what the count is, whatever move that's transpired since this sideways correction, this move following it is done. Because let's say this is any impulse wave, and let's say you have this wave up here, and let's say that's a wave 1, and then we come down for a wave 2. Wave 2 cannot surpass 100% of wave 1. So it can't go below, in this case, when it's going up, it can't go below that wave 1. And so this is a really, really key level. And given the context of the larger picture, this is a 5-wave move. This is wave 4, and this move now is going up in its terminal wave. When this move goes below 34,115, that should confirm that this move is done, this wave 5, but it should also confirm that the entire wave since March of 2020 is also complete. So when we take it even a step further, and for those that have already seen my last video covering the 90-year chart on the Dow Jones, we'll take it one step further. We won't go too crazy, but we'll just go back to 2009. This also completes a 5-wave pattern since then. This has been a 12-year bull market. 12-year bull market, the longest bull market in US market history. Yeah, it's been going on for a while, and it's a statistical anomaly, but there's a quote, I think it goes, unlikely things are statistically, like, they're bound to happen in improbable frequencies or something like that. Like, crazy things happen, anomalies happen, but they don't go forever, basically. And they count from 2009 goes something like this. You have a wave 1 and a wave 2. Then you have another wave 1 and wave 2 of smaller degree, which is followed by a wave 3, a wave 4, and a wave 5. So that's the internal subdivision of wave 3. And then you have this expanding triangle. In the S&P 500, it could be counted as an expanded flat, where wave 3 goes up to September of 2018. But in the Dow Jones, this definitely looks corrective. So I would count it as an expanding triangle. And we're going to go ahead and put 5 up here. I'm going to make these labels a little bit bigger. Let's make it something like cycle waves. There we go. And we have an expanding triangle that goes something like this. A, B, C, D, and E. And that's the pattern. And so this fifth wave that's going up right now, it won't only complete the fifth wave since March of 2020, but it'll also complete a larger degree 5-wave move up since 2009. So this is why it's really important. Now, when we look at the S&P 500, which has been the chart that I've been looking at a lot when looking at a stock market, its structure is not quite as clear to me. I think we definitely have. Let me go to the weekly chart here. We definitely have a wave one that I would say either goes up to here or to here. This is either a wave two or this is a wave two, and this is either a small degree wave two or a large degree wave two. And we've been just going up in this wave three. Now, the difference in the S&P 500 and the Dow is that the Dow had this big correction. That correction that I showed in the triangle, that occurred over I think 5 months. So a really long-term, large degree correction when we're looking at the structure since March of 2020. The S&P hasn't had one of those large degree corrections. At least it hasn't been very clear. Now, if we go ahead and apply the same count that we have for the S&P that we have for the Dow, it would look something like this: wave one, wave two here, but it'd probably be wave two here, 1, 2, and then we're going up in this large wave three. Wave four just ended in the Dow, so we would put it something like that, and then we have another wave 5 going up. The problem with this is this could still just be a small degree wave 4. This traced out a double zigzag, so we know it's probably a larger degree pattern, but it might not be proportional to this decline over here. While it is technically, because it lasted about the same amount of time, it's not clear as the Dow is. And so if we look at the Dow, we can tell. Let me just plug in my computer here. We can tell that, actually, I'm going to do a clean chart here just so we can see it without all the craziness. Let's go on the weekly chart. This correction for the Dow Jones lasted longer than any other correction. And we also know that triangles and double threes, but triangles for sure, which I think is the cleanest count, they occur only in the fourth wave position of an impulse. They don't occur in wave two. And they're a corrective pattern, so they don't occur in wave one or wave three or wave 5. And since this took place from May, early to mid-May, and it ended September 27th. So May, June, rest of May, June, July, August, September, almost 6 months that this pattern traced out. And that's much longer than the pattern that took place back in August to October. So this is very clear that it's a larger degree correction. It's not just some kind of short-term correction. So we know it's a wave 4, and we also know that it's a larger degree correction. The only other way that you could say that this is not going to be the final move up is if you were to say that this is wave 4 of 3. And so wave 3 is actually going to be over here, and this is just the wave 4 of this wave 3. I don't think that's a very clean count because this wave 4 is so disproportionately large, and it took so much longer than any of these kinds of wave 2s that took place earlier on in the wave 3 that I just don't think it's a clean count. That's the only other way you could look at it. And even if that's the case, if we break below 34,000, what is it? 33,785.54, it would be very likely that even a large degree wave 4 isn't taking place. But that'll become more apparent as we see the extent of this move up. So that's the basic kind of update that I wanted to make, that we're having this big wave 4, we're going up in this wave 5. And once this level is broken and confirming the end of this move following this 5-month-long triangle, this consolidation pattern that precedes the final move of an impulse, that should confirm that a top is in the stock market. And I would uh, say that it would probably happen very, very quickly. And it'll probably be apparent before that even happens. Now, how long can this wave 5 go up? Now, that's the question. That's what I want to focus on today, because this is not just a, oh, let's time the top kind of video, because I'm actually quite bullish right now in the short term. Now, that would go away completely, and I would become, again, the biggest bear of them all if we break below 33,785.54. I think that's the, yeah. Now, how long could this wave 5 take, and how high could this wave 5 go? Well, we're going to go to some different charts where I'm going to share some measurements that could give us some kind of idea as to how far it could go. So first off, this is my active chart that I use for day-to-day price action, but I have some really important levels of this. First off, I want to go super big picture. So we're going to go back to the monthly chart, and we are going to check out this 90-year, this beautiful 90-year chart. We're going to go to the log scale to kind of put this all together, because we can't really interpret this chart without putting it on the log scale. And we're going to go back all the way to the Great Depression. And we see here that we've had this massive 5-wave move up. Now, it could be counted in a couple different ways. So I'm not going to say that we're definitely going to have a larger correction than the Great Depression, but to say the least, it's going to be larger than the correction that took place from 2000 to 2009, because that was just a smaller degree wave 4. This will either be a large wave 4, in which this would have to be recounted to this decade, and this was all an extended wave 3, something like this: wave 1, wave 2, wave 3, wave 4, wave 5 of 3, and now we're starting wave 4. So that could be a possibility. So in my opinion, this correction will be the most significant correction since at least the 1970s, but from a technical standpoint, it'll be the worst correction since 37 to 42. And how big of a correction was that? Let's see, about 5-year correction. That went down about 52%. Yeah, I mean, that's pretty modest. Again, that's just the technical picture. I think we're going to be going down much more than 52% in the next 3-5 years. But you know, that's just the alternate count. The other count, which is what I would favor, is that this is a complete 5-wave move since the Great Depression, and therefore we're going to have a correction that we haven't seen, that's not on any scale that we've seen since the Great Depression. That's kind of what this chart is telling you. Now, I have 2 really important channels that I want to show here. The first one, I'm going to go ahead and delete this one just so I can focus on this shift pitchfork here that goes from the first move up following the Great Depression crash. You know, the Great Depression lasted more than 3 years, but the extent of the crash from top to bottom only lasted about 3 years. So, which goes from the first move up to 37 to wave 2 back in 42, 1942, that is. And this creates this really beautiful channel that we can only see on the log scale. And we look at this is the median line. So this, in a way, if you're following a trend, you could kind of look at this as this red line right here is fair value, you know, decent buy, you know, middle of the trend. The closer we get over to this bottom line is like ultra cheap. We can see that this line has never even been hit. We tested this purple line a little bit back in 82 following stagflation, the great inflation in the 70s. This blue line is cheap, and this green line here right below the red line is relatively cheap. You could kind of think of it like that. If you have a trend that has really been confirmed, okay? And then as we go above the red line, you start getting into, you know, expensive territory, and then you get into really extremely expensive territory, and then you get into bubble territory, which is, I would say, this last region right here. This region has only been hit one time, this top region right here, which is just absolutely crazy when you look at it from a long-term standpoint, how overbought or expensive it is relative to the larger trend. And that was right before the dot-com bust in the around the year 2000. We got close to testing it again post dot-com bubble recovery right before the housing bubble burst. And we actually got right below this red line here saying fair value, or actually a little bit undervalued in 2009. Since then, we've moved right back above and we're heading up, and we're actually getting close to testing this orange line that we have not been in, this orange range that we haven't been in since the early 2000s. And if we actually zoom in, we are in it. We are actually in it right now. We actually, in this triangle, we tested this purple channel right here and bounced off, and we're surging higher with an all-time high, and it looks like a fifth wave. So this is really, really kind of painting the picture in my mind, as far as this is bubble territory. This is quite possibly the melt up. This is the last massive move up that we're going to have in this rally since March of 2020. But when we look big picture, it's a big, big rally. At least this trend since 2009 is coming to an end. The question is whether or not the trend since 1932 is coming to an end. I would say at the very least, this is going to be the biggest correction because since 1942, because this is in the nicest way of interpreting this, you could say that this is an extended wave three. So 1, 2, 3, 4, 5, which means this whole trend is at least coming to an end, and which would probably take between 5 and 10 years. This is going to be a wave 4, so it's probably going to be longer than wave 2. So it's, it's going to extend out, and then we could possibly have one more all-time high to complete the trend since 1932. That this is just a theoretical way of viewing this long-term roadmap of the market. So that's the first channel I wanted to look at. Now, the second channel I wanted to show you guys. Let's see, can we get it back here? Well, okay, this is what we'll do. Actually, we keep undoing it. Will it come back? Oh, yeah, here it comes. 1 second. There it is. Okay, so we're going to remove this chart here for a second, this pitchfork. Now we're going to focus on this channel right here. So this is a channel going from wave 2 to wave 4 from 1942 to 1975. And then this is being extended out to touch the bubble right here back in 2000. Normally you would extend it from wave 3, but we're way above it. And so this is one channel that I think is going to be interesting to watch. And when we look at how this channel extends out, we are getting rather close to it. And this is, I think, going to be the first level of resistance for this wave 5. Now, again, when we go back to looking at this, you guys know that we made a new all-time high. So this is back in September when I posted this chart. The minimum requirement for wave 5 is to break above the extreme of wave 4, the prior wave. So technically speaking, minimum requirement has already been achieved. The market doesn't technically need to go any higher to have a complete looking trend, because that wave 5 has gone above wave 4. Wave 5 can be unpredictable, though, how far it goes up. But we have a lot of information on the structure and the long-term structure to start kind of putting the pieces together to assess the probabilities of how extreme this wave 5 will be. So I want to just mention that because, again, all of this is looking at the potential upside right now from a trading standpoint, because it's not like this is, some long-term trend. This is the final wave since March of 2020. So anyways, if we break above that 33,785 level, this is all void, all of these targets and looking to the upside, because it would break the structure. But going back to this anyways, this is what I believe to be the first level of resistance for the US stock market and this wave 5 going up in the Dow Jones Industrial Average specifically. Let's say we go up in November, straight up, this level overlaps the channel at around 39,000. We go up to December, 39,200, January, 39,300, 400. So between the 39,000 and let's say 39,600 level in the next 3-4 months, that's kind of the first level of resistance. And I don't think we're really going to get much above this ultimately. I think we might kind of, play around with this a little bit before actually falling down. So that's the first, those are the first two charts I wanted, or first two channels that I wanted to show you guys as far as potential resistance moving forward, because those are the two channels I'm going to be looking for. We've got this parallel channel from wave 2 and wave 4 from the 40s and the 70s, and then we have this shift pitchfork, both of which will have a great deal of resistance to the Dow Jones Industrial Average, because this is that extremely historic, once in a lifetime overbought kind of condition in the market. The ceiling for this shift pitchfork channel is not much higher, but a great deal higher. We're talking between 43,800 in November to around 44,600, 44,700. Okay, so those are some of the levels. But something really important I want to talk about next. So those are the two channels that are giving us some potential stopping points for this wave 5. The second thing I wanted to show, well, I can just do it on this chart, but I want to show this before I get into these time extensions that are on this chart. The Dow Jones Industrial Average 5-wave move up is not complete, but there's an important rule in Elliott wave theory that is actually very helpful in this structure. Here's our 5-wave move up. We don't know how long wave 5 is going to be, but we do know something. Wave 3 is shorter than wave 1. And there's a rule in an impulse wave, wave 3 can't be the shortest wave. And so this gives us a hint as far as if this is the correct count, wave 5 can't exceed the magnitude from a point standpoint of wave 3. Now, how long is wave 3? I calculated that. I think it's around 8,900 points. Let me just make sure that that's the number I'm thinking. It's about, about 9,000 points, plus or minus, 100 here or there. But wave 1 is, I think, over 11,000 points. Now, I did these levels very, very precisely yesterday to come up with this level that I'm about to share. Yeah, about 11,000 points. And so I took the difference. I took the wave 3 magnitude and then projected it from the bottom of wave 4 to see how high can wave 5 go while maintaining the integrity of the structure. And that is at this level right here, these two levels. Now, again, I mentioned at the beginning of the video how there are two potential counts for this wave 4, and they differ by about 300 points. It could be looked at as a double 3, or it could be looked at as a running triangle, which is the count that I prefer. But regardless, once this level gets taken out, actually, no, it's not that level. That was before the structure was complete. Once the 33,785.54 level is taken out, it doesn't matter what the count is. This move following this consolidation, this wave 4, is complete. And so I took both projections from the 33,785.54 and the higher level, which is if you were to count it as a double 3, which is a bit more of a complex count, but that would signify, or that would suggest that wave 4 ended at 34,115.10. So either way, projected from both of those levels, these are the ceilings, let's say. And if the double 3 count, to give it the benefit of the doubt, that is this top line. That is the ceiling for the Dow Jones Industrial Average, which is 43,062.89. If the Dow Jones goes above that, which again, this is going to be the crazy bubble area, but that I would have to start I would have to consider what the count is and how it could be a potentially different count, because wave 5 would then exceed wave 3, and that's a problem because wave 3 is also exceeded by wave 1, and wave 3 can't be the longest wave or the shortest wave. Now, what's cool about this is this basically gives us a ceiling, at least theoretically, a ceiling to how high this wave 5 can go. Now, you might be saying, what are these, measurements up here? Why are they above the theoretical ceiling of this market, manic move up? And that's because we're on the log scale. I need to switch that to the arithmetic scale. And these are some targets that I have based off of Fibonacci relationships with prior waves. So I'm going to zoom this out a little bit. And here are some of the targets that I'm looking at. So we've got 2 targets, and these are based on, well, 3 targets, and these are based off 2 relationships. The first one, and these bold lines, are based off of the wave 1 through 3 move up projected from the bottom of wave 4. So if wave 5 were to be 38.2% of this range right here from wave 1 to wave 3, that would land the Dow Jones between at around 40,274, give or take. So that's the first level. Usually wave 5s tend to be between the 38.2% retracement and the 61.8% retracement, with the 50% retracement being there in the middle. The 61.8% retracement, though, that one exceeds our ceiling for what wave 5 could possibly theoretically be, right, under the Elliott wave framework. So the 50% retracement of this move, if wave 5 were to be 50% of this wave 1 to 3 move up, that would be at 42,270 something. 42,733. No, that's the ceiling for here for the running triangle. Yeah, 42,277. That is another target, and that is right below the ceiling that I have here for this wave 5 potential. The other target right here, which is pretty close to the 40,274 level, this is at 40,660. This is 61.8% of wave 1. Now, wave 5s are probably, other than wave 4, but when we're talking about the impulse waves, waves 1, 3, and 5, wave 5s are usually the most unpredictable wave. It varies. Sometimes it just hardly goes above wave 4. Sometimes it's the strongest wave. There's a lot of variability. Usually wave 3 is the strongest wave, but wave 5 has a lot of, it's kind of a wild card sometimes. But wave 5 is, its most recurring relationship is to its corresponding wave 1. In wave 1, if wave 5 was 100% of wave 1, that would obviously be too high, and it wouldn't align with the larger structure. It would be too large of a wave 5 because wave 3 is the shortest. So the only target here that would be valid is the 61.8%. If wave 5 is 61.8% of wave 1, that would land at around 40,660. So those are some of the key levels I'm looking at. And I really do think that the 38,500 to the 41,000 level, that is a really, really critical level, because that's got the parallel channel that I was talking about that goes from the 40s to the 70s and projected out to the top of the dot-com bubble. And this also takes into account a confluence of 2 Fibonacci retracements that will be very significant in this wave 5, I think. And so that's that. And again, the ceiling for this, or the whole count, would be it would need some kind of adjustment, because it wouldn't be technically true, though, Elliott wave theory is a framework. It's not the only tool that I use. And, I want to take it to, I wouldn't be a buyer of the stock market if it went above 43,000, let's say, because, oh, it can't be wave 5, it must be going higher. No, but it would mean that this count would be less viable and attractive. But those are the key levels. So we've got 38,500 being around the parallel channel. And then we've got these two really important Fibonacci retracements between 40,200 and 40,600. And then we've got another retracement right over here. The only other retracement that I think is significant for wave 5 in reference to its structure since March of 2020 over here at 42,277. Now, got one other chart that I want to show you guys, and this is probably my favorite chart right here. This is showing time extensions of the Dow Jones Industrial Average from both its wave 1 that went from March of 2020 to the end of August of 2020, and also the move that happened from March of 2009 to April of 2010. So this is pretty cool. And we've got two really important retracements. First off, this red line is showing the time extensions from this wave 1, the wave 1 that happened in 2020. And we're going to go ahead and go to the monthly here just to be able to see which wave 1 I'm talking about. This is the wave 1 I'm talking about. The initial wave 1, wave 2, and then we have wave 3, which subdivided in 5 waves. 1, 2, 3, 4, 5. Or you could count it 5, A, B, C, 4, 5. Okay. It's not super important, but basically what I'm doing is I'm taking this wave 1, which is a large degree wave 1, and I'm comparing it to this wave 5 in terms of duration. This wave 1 here took 13 months, I think it was, March to April. Yep, 13 months. And then this wave 1 over here, from March to August, so March, April, May, June, July, August. Did I get that right? Yeah, 5 months. So I'm taking those two wave 1s, which have the most correspondence to wave 5, and I'm doing a time extension to see what are some probable stopping points for this wave 5 based off time alone, not on how high it goes, but time. So when we look at this wave 1 from 2020, we got a couple extensions available. Now, again, this wave 5 just started. It only started, 3 weeks ago. And so this is still pretty early, and we're comparing it to this 5-month move up. The first important retracement that I think is realistic is the 61.8. I think there's a 38.2, but we're pretty close to that. So you could look at this level too. This is at the end of November, so we could go ahead and look at that. But I think the important cluster is right here towards the end of the year. This is January, first week of January 2022, and then this one is January 17th, or the week of January 17th, 2022. So this is 61.8%, would have lasted 61.8% of this wave 1. And then this black line right here represents this entire wave 5 lasting 161.8% of this wave 1. So because we've already actually surpassed 100% retracement, because that was back in April, actually, that we surpassed 100% retracement of the wave 1 back in 2009 to 2010. Here's 100%. That was back in, okay, about around May. And so that is no longer a level that we really care about. So those are the first targets between first week of January to second week, or to towards the end of January. And then we've also got the next target, 100% retracement of wave 1. That would be if wave 5 lasted the same amount of time as wave 1 back here in March of 2020. that would land us in early March. So to me, in my personal opinion, I think the market is going to top within this range right here between early January to early March. That's my guess. Who knows? We will see. I'm going to be looking at the wave count as well, looking at those Fibonacci extensions, seeing how far it gets, and getting to some of those important levels between 38,000 and 40,000. But these are some ideas on how far this could go when we look at time. Now we have two other relationships too. This is 161.8% of this wave one right here. And this would be in June, mid-June. And then this other one right here, 200% of wave one back from 2009. If this lasted twice as long as that wave following the financial crisis, that would land us in late June to early July. So that's kind of the window. Again, I think this is the key window, and we look at this from 38,000 to 40,000, taking into account the channels, the shift pitchfork, though we're already in the most expensive zone, the highest, most extreme range of the shift pitchfork. So it doesn't really matter at this point. We're already in topping territory because the dot-com bubble didn't even reach the top of the channel. And so it's not required to go any higher, especially since even on the small degree, wave 5 has already surpassed the extreme of wave 4. So, I mean, to me, I just find this absolutely fascinating, to be completely honest. But what we're going to do is make a little channel between this important range. So we'll go ahead and put it right here. This is at March. Again, I favor earlier 2022, not necessarily all the way into March, but you never know. These things can go crazy. But we're going to take it like that, and we're going to go up to 40,000. That looks good. And does this go down? That looks good. This is the range I'm looking at. This is a kind of pretty range when we take into account both channels, the Fibonacci extensions back here on the arithmetic scale when looking at the wave ones, the magnitude of wave ones, and also the magnitude of the range of wave 1 through 3, the shift pitchfork, the parallel channel, and these time extensions. This is, I think, this is the confluence area of all of those measurements. And that is between the range of 38,500 to 40,700 between early January and early March 2022. That's what I'm going to be looking at. And, I find, there's some people that probably think the market's already going to top. This is my opinion on why I think this wave 5 actually is going to trace out a pretty significant move up. And those reasons are wave 1 and wave 3 both lasted about 6 months each. So I find it unlikely that this wave 5 is not going to make it a month. I think we're going to last several months at the very least. That's my personal opinion. Again, this would all be void if the Dow Jones Industrial Average breaks below 33,785.54. But until then, I'm having a bullish bias because I think this could be a pretty intriguing move up. It's going to bring everyone into it. There are also a lot of individual stocks since the S&P, its range just got so extended and there weren't a lot of clear patterns like there is right here in the Dow, this beautiful sideways running triangle pattern, which signifies a large degree of wave 4, relatively speaking, when looking back since 2020. I wasn't really interested in looking. I was just waiting for clarity, and I was looking at different individual stocks and focusing more on the cryptocurrency market and whatnot. And a lot of these individual stocks, some of them have clearer patterns, at least much clearer than the S&P. And again, some of these stocks also seem to have upside. So I think that goes to support further gains in the Dow Jones Industrial Average with this wave 5, not only being this tiny wave, but something that extends out for another couple months probably. And another reason is that bull markets, especially manias like we have in this one. I think we can only compare this really to 1929, into the late 90s, into the dot-com bubble. In those markets, if you look back at them, they ended on extreme greed and hysteria and jubilance and everything towards the market, and the markets were soaring, and they didn't just you know creep up like this, and then plummet. No, it usually ends off with this kind of melt off move, melt your face off move, and we've seen that with Bitcoin too. Some of these big moves back, especially back in 2017, these end off extreme euphoria and exuberance towards the market because of the amount of returns that people are getting, and that is brought on by a very big move that precedes the completion of the trend. And so that's how bull markets end, especially bubbles and manias like this. They don't end nice and softly, with this nice little crescent move. No, it gets extreme, and oftentimes right before the big move, it goes into bubble territory where it's just flying up. And we're starting to see that in some stocks. You look at Tesla, and you look at some of these lower cap stocks too. I mean, some of them are going pretty nuts, and I think that's going to continue as this wave 5 intensifies and we start getting closer to the top. Now, again, it'll be tough to really time it, especially if it's moving fast. But what I think gives a lot of clarity to this larger picture is that critical level at 33,785.54. Man, I'm going to be saying that in my sleep. At this point, I've got to memorize. So it's like, that's the level. It's not as applicable to the S&P 500, unfortunately, because the S&P 500 doesn't have as clear of a wave 4. This wave 4 looks proportional to just about every other correction that's taken place in the S&P's larger trend. It doesn't look really clear as a large degree wave 4 this recent correction, because the S&P and the Nasdaq have been continuing higher while the Dow has been meandering in this large degree wave 4 for the last 5 months before this last move up to highs. And so I'm not going to be quick to try to time the top in the S&P just because the structure isn't as clear, and there's really not any key level in the S&P below 4,000 to me. The last swing low is as good of a level as any, and that level is at, let me go ahead and check that real quick since this is already a little bit of a long video, but I wanted to really share everything. That level, 42.7894. I mean, that's the best level right now. But again, this could be the large degree wave 4, but also could be wave 4 of 3. Wave 1, wave 2, wave 1, 2, 3, 4, 5. That's all 3. And then we have a large degree wave 4 or 5. It could be. We'll see. But for the Dow, I have a much stronger conviction that this level here at 33,785.54 is key. And once broken, I think we'll confirm the top, at least in the Dow Jones Industrial Average. And all the U.S. stock indices are pretty positively correlated. And so I think once that level's violated in the Dow, I don't think it will mean that the other indexes are very far from following the Dow in its eventual morphing into a bear market. So that's my opinion there. But until then, the upside, the bulls are in control, that's for sure, as this wave 5 is starting to ramp up. And I think we're going to be seeing that also reflect in the cryptocurrency market. I've made updates on Bitcoin on my Twitter and Instagram. So again, check that out. I'll be making more updates on the US stock market when I think there's something important. But for now, I'm just going to be kind of letting it run and not trying to fight the trend and waiting for some kind of strong indication that this move up, since this triangle thrust up to new all-time highs, is broken. And until then, I probably won't be making a video on the US stock market until that happens, because I've kind of shared everything in this video. So I hope this has helped. And if you guys have any questions or want to talk about this, you could clearly see that I really enjoy TA, and I'm be more than happy to talk to anyone that is interested in this, in what's happening right now. And if you agree with this analysis or have a different picture on what you think is happening, I'd love to hear it. So please let me know. Um, Again, the best alternate case to this count is that this is still wave 3 and this is just wave 4 of 3. And then this will have an even larger wave 4 and then a wave 5. But I don't think the market's just going to be meandering like that. And especially in the Dow, I see it more likely in the S&P, but with the Dow, this looks like a wave 4 of large degree. That's more than proportion enough to this wave 2, especially from a time standpoint, for how long it lasted, over 5 months. So, but you gotta keep your eyes on all the possibilities at hand when involved in this game. So I'm gonna try to keep doing that, and have fresh eyes. So anyways, I'm not going to rant any longer. I hope this was helpful. Please let me know your opinions on this, on the technical picture for the US stock market, and I'll see you guys next time.